Good morning, everyone. Welcome to Trading Together. I'm Mel Gacee. Really good to be here with you this morning. We are going to do some live trading today. So, the goal of this stream is to trade live with you in front of you so you can see how it's done. I'm a day trader, I'm a scalper. I trade the SPY mostly. I trade 0 days to expiration options. And that all sounds a little complex, but I'm going to make it easy for you. I'm going to break it down for you. So the goal is to take some live trades together, to do some market analysis, and to do some learning. This is an interactive place, so I welcome your comments and your questions. And if you can drop your name in the chat, I would love to meet you and talk with you, interact with you, and answer any questions or comments you might have. All right, looks like Gaia Body Elixirs. Yay, I made it on time. Welcome. I don't know what to call you, but right now I'm going to call you Gaia, unless you tell me different. Welcome, welcome. Thank you so much for being here. I appreciate it. Give me 1 second. I left the tea going on the stove. I went live and I forgot my tea was on. I'm sorry about that. All right. Name is Ebony. I love that name. Welcome, Ebony. So glad to have you here. Okay. Let's talk about what we've got so far this morning. We've been open for a little over an hour, and we are looking at chop. We're looking at sideways action. So you can see on this chart right here that we're getting this kind of a snaking up and down, up and down. And right now we're just kind of in a little sideways motion right here. So basically, we can trade in this range. We do have to be careful. It's not a super huge range. So I would give it a little time before I traded it to let us see which direction we're going to break out from. Again, you can see it's just a little bit herky-jerky. So we want to give it some time to tell us which direction it's going in. Now, in my opinion, with the daily chart, I'll show you what I mean here. In my opinion, we are probably going up between now and the end of the year. Now, that doesn't mean we go straight up in a line, because we've got about 5 trading days left in the year. Is that right? 26, 27, 28. About 5 trading days left in the year. So do we go straight up all 5 days? No, I don't think so. I think we get some zigzag, which is what we normally get. But I do think the overall direction is up. I think that's where we're going. There's something called the Santa Rally. We've talked about it before on this stream, and it's as old as the hills. They've been calling it the Santa Rally for years. Guys, I do kind of like calls here. I'm looking at the 683s. Maybe this, yeah, 683s, I think. And I'm not going to jump just yet because we're a little close to the top. So I'm going to give this a second. But if we look at, let me get to the charts better. We look at where we are. We built this little top. We've hit it 1, 2, 3, and we're right here now. So I'm going to be careful about any calls. Now, I like the direction. I feel like we could come up and break the top, but it's a little, I'm not quite ready to jump into that call yet until we do break the top. Now, if you're new, calls and puts are options, and I'm trading options on the SPY. So I'm not trading the SPY itself. I'm not buying and selling the SPY as a stock. I'm buying and selling the options on the SPY. Calls mean I want it to go up. Puts mean I want it to go down. We can make money when the market goes in either direction. That's very fun. We like that. So I'm just watching here to see if this thing is going to pop this top. That's what we need to see. So I'm ready for calls if it does, but there's just a tiny pinch of room here up to this top. So it's a little risky. It's a little risky to jump in. All right, I'm going to go ahead and try a call here. I am in, and I'm probably not going to take a large win because I have already had a couple of wins today, so I'm not going to chance it on my, I'm not going to overstay my welcome. Let's put it that way. All right, I'm sitting at 5% right now. It's moving. All right, I'm out at 6%. Punch it. All right, that was a fun and quick trade. So I've had a couple of winning trades already this morning, and I think this thing is going to go. Yeah, there it goes. But I'll take that 6% because I was holding over the weekend call, so I made my day already. So sometimes when I've got a nice profit, I'm more cautious on my remaining trades, and that's just the way I preserve capital. I don't want to give anything back. So this thing I think could have hit 10% for us, but I'm okay with 6. I'll take it. And the other thing is we're right here at this overnight high. So I'm going to give this time to show me, are we going to beat this overnight high or are we going to reject off of it? So this trade that I took was kind of maybe a little bit more risky because I took it right in here and we just had a little room to get up to the top. But when we trade 0 days to expiration, which is what I do, and I trade at the money or the first option in the money, those are where those options are going to move faster. They're going to return profit really fast, and they're also going to go against you really fast. So it's a little riskier, but the beauty of that, the beauty of 0 DTE at the money options is that a movement like this, let me zoom in so you can see it. A movement like this is tiny, right? This is not a huge move. This is an itty bitty little move. I took it here. I was out here. So that was less than a minute. And this little teeny move got me 6%. I do that all day long, guys. Now, I'm not saying I don't take losses. I do, but I have a 90+% win rate and I'm a profitable trader. This is what I do for a living. So when we take these little trades, we can jump out with 6, 7, 8, 10%. And that's my niche. I'm not swinging for the fences. I'm not going for 40, 50, 70% winners, bangers. I'm not doing that. That's not my style. I'm a scalper. And by definition, it's kind of a gross visual, but if you think about a scalper, like someone in a warfare situation, they jump in like guerrilla warfare, they take the scalp and they run away, right? That's kind of, it's a gross visual, I'm sorry, but that's kind of how I visualize what we do. It's warfare, right? We're fighting against the big systems. We're fighting against these big algorithms. We're fighting against these big whales who move this market any direction they want to. And we are just, I see us as the little krills kind of floating along behind the whales getting the crumbs. And I'm okay with the crumbs because these whales are moving billions of dollars. I'm okay with the crumbs. So I'm not swinging for the fences. I'm going behind the whales. I'm watching their footprints and I'm taking little wins where I see them. Like I said, my win rate is over 90%, and it's because I keep them small. I don't swing for the fences. Now, I'm not saying there's anything wrong with that strategy. If you're in a strategy that is a reward to risk, let's say 2 to 1, you have to wait for that higher profit. And there's nothing wrong with that. It's just a different strategy. My strategy is day trading and scalping. I prefer to be in and out. I don't want to hold my trades. I don't want to be sitting in trades that are going hours up to days. That's not what I want to do. I utilize almost all of my capital. I do have some things in long-term holding, but I utilize almost all of my capital daily to trade this market, scalping it and quickly in and out. Okay. That's just my niche. Okay, so here we are pushing up over this overnight high, and our call could have made a lot more money, but as I just explained, that's not necessarily my jam. I'm okay with a few little percent. Even if this move continues on, I am not going to FOMO in. I'm not going to trade it again. So one of my rules is I don't trade that same move twice. And there's a reason for that. The reason is I have bought the top and I have sold the bottom many times. So I don't want to do that. I watch for when the move is fresh, which it was right in here. And I take my little piece and I jump out. Now, this move is getting a little more stale. It doesn't mean it can't keep going. It can. And I think today we are going to keep going. I think we're going to see at least, well, let me double check. I'm going to check the gamma here real quick. 685 is where the call wall is sitting on the gamma. So could we hit 685 today? Yeah, I think we could. We don't have to, right? Just because gamma sits at 685 doesn't mean we have to get there. But chances are good. If gamma's sitting at 685, chances are good we won't go past it. So 685 is kind of a resistance zone in my mind for today and maybe for the next couple of days. We'll have to see. So this is a shortened week. We've got a full day tomorrow. We've got half a day on Christmas Eve. And then we're closed, of course, on Christmas Day. And then we're back for a full day on the day after Christmas. Is that Friday? I think it's Friday, 22, 23, 24, 25, 26. It is Friday. I have to use my fingers. So, and we'll be we will be having a full day of trading on Friday. Now, traditionally, we were talking about the Santa rally. Traditionally, 79% of the time, we are going to get a Santa rally. That is a big stat. Think about that for a second. And this stat dates back decades, like back prior to the 50s. I want to say it's back to the 20s, to the 1920s. This stat dates back, but don't quote me on that. I don't know how far the stat dates back, but it's several decades. But I am clear on what the stat says. The stat says 79% of the time we get a Santa rally. What that looks like is usually between 1% to 2% growth during the Santa rally. Now, that Santa rally is a very specific window of time. It's the last 5 trading days of the year, plus the first 2 trading days of the new year. And there are a lot of reasons for that. We've got institutions that are window dressing and they want to make sure they're in all the right stocks. We've got tax implications for the new year. We've got a lot of reasons that we see movements upward. There's a nice jump there. Here's our high, 684.5. A lot of reasons we see movements upward at the end of the year. And so a stat like 79%, that's pretty impressive. Plus, I'm watching the volume and options positioning. I watch that, and I'm watching the gamma positioning. Everything is saying we're probably pushing 700 on the SPY by the end of the Santa rally. Now, that's a good 1.5 or 2% above where we're at right now. But I think that's pretty doable in the next few days toward the end of the year. Okay. So let's take a look at this chart because we are getting this nice push here. Beautiful. Very beautiful. Again, I'm not going to trade this move again. The move started here and we're here. This has been going on for, what is that, 10, 11, 12 minutes. So for me, that move has played. It's done its job. We took our 6%. I'm okay with that. Like I said, can it keep charging up? Yes, it can, but I'm not going to follow it. I'm not going to chase it. I'm not going to FOMO in. That's huge, guys. And it's very hard. So let's talk about FOMO for a minute. That is going to kill more traders. FOMO and revenge trading. I'll say revenge trading is the worst one for killing accounts, but FOMO is right up there. Fear of missing out. If you are FOMOing into trades because you just got to your computer and you saw this move and you said, oh, I got to get in. That is going to hurt your account after revenge trading just about more than any other emotional type of trading. So FOMO is a thing. It's real. And here's the thing you have to remember. There is always another trade. I promise you, there's always another setup. So for me, I'm going to wait for the next setup. Right now, that next setup is looking to move down. Now, does it mean that we're moving down over the whole day? No, but the market zigs and zags. And so you can see right here, down, up, down, up, down, up, down, up. The next move will be down. Do we trade it? Well, that's going to depend on the move. We're going to watch and see what we get. There are certain things I'm looking for before I jump into a move. So the next move for me is down. It depends whether we'll trade it or not on the signals we get. Something to be aware of is the indicators that we're using. So I'm using a couple of different indicators here. I'm using the VWAP, the MACD. I've also got the RSI down here. And these are all indicators that I'm watching and using. Right now, the RSI is telling us that we are very overbought, meaning that the momentum has pushed hard to the upside and the chances of it reversing are fairly good. Now, when we say reverse, it doesn't mean coming all the way back down and crashing. It just means that we're going to start some sort of a downward move here shortly. So we'll watch for that. The RSI, again, I don't use it for much more than the overbought and the oversold conditions. That's what I'm looking for. The VWAP is telling me that we're very bullish. So we look at the space that's been created between the price and the VWAP. The VWAP is this thick white line here. Let me zoom in a little bit so you can see it better. All right, thick white line here is the VWAP. That is the volume weighted average price. It works like a moving average, except that it adds more adds more weight to the price where volume has been increased. Watch this push up. These blue bars here are the volume. So on this push up, we're increasing volume. That's going to also push the VWAP up. So the VWAP stands for volume weighted average price, a moving average that gives extra weight to heavier volume. As we start stretching away from the VWAP, which is what we're doing here, we're getting a lot of air, getting a big pocket between the top of this price and the VWAP. We're also, like I said, we also went overbought. So those two things tell me we're probably going to come back a little closer to the VWAP. Now, how far we come, we don't know yet. Like I said, I'm going to watch. Is there a reason to take a put here? Remember, puts are for when we want the market to go down. Is there a reason to take a put here? Not yet. I would not really be super interested in a put unless we were really coming back down and pushing this VWAP again. Right now, the market feels very bullish to me. So what I want is I want the price to come down and reset a little bit and then give us another leg higher. That would be great. 685, like I said, I think could be our resistance today. We're sitting at 684.8. Do we have enough room here to make some money? Maybe. We're getting close. We're getting close to our resistance area. So, those are kind of the indicators I'm using, right? So VWAP, RSI, I've got the MACD over here on my futures window. This is the ES, this is the futures over the S&P 500. I've got my MACD here. I'm watching that. I'm also watching my VIX, and VIX is, remember, that's the fear gauge. It goes out and it looks at options on the S&P 500 1 month out, and it gauges whether investors are more fearful or more exuberant. When investors are fearful, the VIX goes up and the market comes down. They have an inverse relationship. When the participants are fearful, the VIX, I said that, fearful, VIX goes up, market comes down. When they're exuberant, VIX comes down, market goes up. This is exactly what we're experiencing today. The VIX has been knocked back into last month. We are down at 14.4. We haven't seen 14 in a while. So VIX is very telling us investors are very complacent right now, very exuberant, and we could expect to see the market going up when you've got a VIX at 14. So all of these things together are telling me overall we should be moving up. Now, right now, what I'd like to see for my next trade is a move down, a little bit of a reset here, a little bit of a break, and then another leg up. Or if the move continues down through the VWAP, then I might consider some puts below the VWAP. Right now, it's a little bullish, and I want to trade calls, but I would like this move to reset. Give us a little reset, and then another leg higher. That's how I want to trade the next move. That's what I'm waiting for. And you'll hear me say a lot that 90% of trading is waiting. We are waiting for the right setups. We are waiting for our trade to play the way it needs to. We're waiting for things to happen in the market. So 90% of trading is waiting. It's about being patient. And that's sometimes really hard to do. A lot of new traders want to just get in on every move. You're very excited. You see a move and you want to grab it. And that's normal. But we've got to be patient and wait for our, what I call A1 setups. Wait for those setups because there are tons of setups that we can take. But are they the perfect setups? No. So we wait for the perfect setups. That's how I'm trading. All right. If you have any questions, you can drop them in the chat. I would love to answer them. Right now, like I said, we are waiting. We're getting a little bit of a move here, just a little bit, slowing down right here at this top at 684.98. Where did I say our resistance was, guys? 685. We got 684.98. That's like right there, just a hair away. And we're getting a slowdown. Now, it doesn't mean we can't go higher. We can. But the levels I have for today are looking at about 685. The other thing we can look at, let me show you. When I take a trade, I'm going to come over here. I'm on Thinkorswim, by the way. And I'm going to come over here to my options chain. I'm looking again at 0 days to expiration. So these are options that are expiring today on December 22nd. Now, is that high risk? Yes, it's high risk because options expire worthless. If I buy an option today that expires at the end of today, if I don't get out of that option, I lose my money. It does not matter what the market does. If I don't get out of that option, I lose my money. It expires worthless. Now, other things happen. If I let that option go in the money and I don't sell it, then I can get, exercise. That's a whole different. I'm just giving you a simple example of if this option goes to the end of the day and I don't get out of it, I've lost my money, period. So are 0 days more risky? Yes, they are. 0 days to expiration are more risky. However, I've mitigated a lot of risk by employing my strategy, which is be in and out quickly. I don't let it go to 100% loss. I keep a stop loss. I'm very, very strong about that. Preserving capital is key. That's really important. So if it goes against me, I'm going to take my stop. I'm going to get out and I'm going to look for the next trade. I'll tell you this. I take a stop probably every day, every other day, because I trade a lot. And I usually can trade right back out of any losses, almost always to a break even or a green position. I have my red days. I even have my red weeks. They're not that often, but usually if I take a stop, I'm going to be able to trade back out of that and get to at least a break even by the end of the day. So yes, 0 days are more, they're more risky, but I'm mitigating the risk with my style. Now, when I look over here at the options chain, I have my option chain modified to show me the volume and the open interest, the delta and the gamma. So I'm looking at the volume at the money. So the first strike at the money or in the money on the call side is the 684 call. We have 339,000 in volume sitting there. That means that this option has been traded 339,000 times. The 685s are at 343,000. Then I'm going to look on the put side and see what kind of volume we have over there. We've got 351,000 sitting at the 683s, so just a little higher on the put side. And we've got 214,000 sitting at the 684s. So I do a quick little visual and I say, okay, it looks to me like we're a little heavier on the call side, just a bit. And that kind of gives me an idea of what our short-term movement is going to be. When we see the heavier volumes sitting right here at these strikes, and I'm kind of doing just a little mental math, just a quick, we're roughly about 700,000 between the 684s and the 685s on the call side. And we're roughly at about 600,000 between the 684 and the 683s on the put side. So that just gives me a rough estimate, a rough idea that right now in this moment, we're a little bit more bullish. And of course we can see it on the chart. However, volume changes very quickly, very, very quickly. So that's one thing that you can't just check a volume and hold that thought in your head all day. No, this is moving. This is dynamic. It's moving all the time. So you always got to be on top of it. Okay. All right. So let's get back to our charts here and see, because we are getting a bit of a round over. So we hit this top, it's coming down. Right here was our top at what we said, almost 685, almost to the penny. So now we're getting a little response coming down a little bit, but it's not coming down too far just yet. Remember, our VWAP is a good bit below us. So could we trade a put right here? Yes, but I wouldn't do it. I wouldn't do it right now. There's not enough signals to tell me that we are dropping. I mean, we could, but I wouldn't do it right now. All right. So right now there's no trade, just waiting. Like I said, I'm waiting for two things. Number one, I'm waiting to see if we're going to come all the way down, cross this VWAP and get negative, or if we're going to come down, reset these moving averages, and then make another leg higher. Either one of those things I'm looking for. The other thing that could happen is we just go sideways at this level, which is a strong possibility, because a lot of times once they hit the level that they wanted, and let's say it was 685, I'm not positive we can't go higher, but let's say 685 was the level that they wanted to hit. They could just pull it sideways for the rest of the day. And that does start happening later in the morning into the afternoon. A lot of times you'll see the market just drift sideways, and that's very common. What it accomplishes for bigger money. So remember this, there is always someone on the other side of your trade. So when we take the trade on this stream, most of the time we're going to be the buyer of the option, but there is a seller on the other side. Now, as our option loses time value when we get closer to the end of the day, the seller of that option, the one who took the other side of our trade, well, he's gaining that, he or she are gaining that credit, that premium, right? So as it sucks it out of our account, as time value eats away and sucks it out of our account, it puts it in their account. So as we see that the price float sideways, lots of times in the middle of the day, that happens a lot. As we see that, just remember there are forces in play that on the other side of your trade, on the other side of anybody's trade, the people selling the options, it's in their benefit to let this thing float sideways, because as the time value erodes our option, it increases theirs. So something to bear in mind when we start getting stuck in these ranges. The ranges are kryptonite, right? The ranges for day traders and scalpers, ranges are kryptonite, because that's where we lose our time value, otherwise known as theta, right? That's where we lose it. So range trading is kryptonite. Big enough ranges, like here, what we had earlier this morning, these ranges, they're they're big enough to trade and make money. So we can do that. And we did. We took that trade together, right over here. We took that trade together. We were trading that range. But when it gets into tinier ranges, and for me, I don't trade a range that is 10 points or less. And I'm talking about points like on the SPX, not on the SPY. It would be like $1 on the SPY. But ranges of 10 points or less are not, that's not, the risk is too much for the reward. The reward is not enough to make the risk worth it on a 10-point range. All right, so we are still in the process of moving down / sideways. No puts right now, no calls, no signals for either. So while we are waiting, we can talk a little bit about Bitcoin. I'm watching Bitcoin carefully. I've got a couple of trades in Bitcoin, trading some credit put spreads on Bitcoin. They're doing beautifully. I should say I'm trading it on MSTR and also on BMNR. So MSTR is a ticker that is basically, it's a company that's a treasury for holding Bitcoin. You might have heard of it. BMNR is a treasury that is holding Ethereum, right? So I am bullish on both of those two cryptos. I'm bullish in the crypto space, even though we've had a nasty correction. I think we've hit a bottom. I think we're moving back up. So I have credit put spreads on BMNR and also on MSTR, and those are doing pretty well today, which is good because we got a little pump here on Bitcoin, and that made me happy. So Bitcoin sitting at 89.8, almost 90. We hit 90 a couple of times today. And BMNR bouncing about 1%, MSTR bouncing about 2% almost. So really nice move for both of those companies. Also, something to bear in mind is I've been watching the flow on Tesla, and I think Tesla is a buy going into the new year. I think Tesla is going to push up over 500 in January. There's a lot of options positioning on it. I think, not saying it can't dip before then, but I think Tesla is going up moving into January. Just my thoughts on it. All right, so still just kind of gently floating down, but more sideways here. So still waiting for a trade, and that's okay. Like I said, 90% of trading is waiting. It really, really is. All right. We can talk a little bit about my chart setup if anyone is interested. Like I said, I am using Thinkorswim, and I've got my chart divided into several little sub compartments. I've got I'm trading on the 1 minute chart on the SPY. So this is the 1 minute right here. This is my main chart. This is what I'm looking at is the SPY 1 minute. I also have the ES, which I said earlier was the futures over the S&P 500. So let's talk about what is the SPY, what are the futures, what is the S&P 500. The stock market is kind of divided into these major indices. You heard of them. The S&P 500, the NASDAQ, the Dow, the Russell. These are the major indices that are housing the stocks in the stock market. When we talk about the stock market, we're talking about that whole universe of stocks out there. And then the indices are kind of these baskets holding different types of stocks. The S&P 500, of course, holds 500 of the best performing stocks, big stocks, mega large stocks. And that's the S&P 500. It is an index, so you can't own the S&P 500 like you could own a stock. So what did they do? They created the SPY, which is an ETF built over the S&P 500. Basically, the SPY mimics the holdings of the S&P 500. So the SPY holds all of the same stocks that the index does, that the S&P 500 does, and they have made it so that you can own the SPY. So if you own the SPY, in essence, you own the S&P 500. What the S&P 500 does, the SPY does, because it's an exact mirror replica. So the SPY is how we own the index. Now, we can trade options on the SPY, which is what I do. We can also trade options on the SPX. Even though it's an index, the S&P 500, you can trade options on it. And I do that occasionally as well. Now, the ES, the S&P 500 futures, these are contracts that are dated in the future. So people are out there trading futures. And there are futures over everything. There's coffee futures, sugar futures, NASDAQ futures, oil futures, gold. It's a huge market, right? So I keep the futures chart right here. But remember, the SPY, the S&P 500, and the ES futures, they're all a replica of each other. They're all doing the exact same thing. The chart looks almost exactly the same. The only thing I do is chart them a little differently because the index itself does not trade overnight. SPY does, and the ES does. Those both trade all night with a small stop, small little break. So they trade all night. And so those charts with moving averages and things like that, they're going to look a little bit different than the index, right? So I have those charted a little differently. There's small variations, but by and large, they are the same thing. So that's my chart setup. So I've got the SPX, that's the index, sitting over here. I've got the 1 minute chart on the SPY sitting right here. I've got the 5 minute chart on the SPY sitting right here. I have the 1 minute chart on the ES sitting right here. And I have the 1 minute chart on the VIX, the volatility index, sitting right here. So then I also have my watch list. And I keep my watch list basically all the things that I feel are going to either I have a position in it, so it's on my watch list, or these are tickers that are going to affect the SPX and the SPY. So the things that affect the SPY the most are going to be the top 7 or 8 weighted stocks in the S&P 500. These are the mega tech stocks. These are what we call the Magnificent 7 or the Magnificent 8. And these are the big behemoth titan stocks that everybody's heard of, right? Apple, Amazon, Microsoft, Meta, Tesla, Google, NVIDIA, and also Broadcom is also a big titan. So these guys are like, picture of Atlas, holding the world on his back. That's what these stocks are doing for the S&P 500. They are holding the whole S&P 500 because the 40% of the value of the S&P 500 is made up of these 8 behemoth stocks. So as these stocks go, so goes the index, so goes the SPY, so goes the futures. So I keep them over here and I watch them. They're all over here on my watch list, and I keep an eye on those, right? So we've got Tesla really behaving nicely today, up 2.5%. We've got NVIDIA up 1.5%. We've got Google up just a little over its flat line at 0.3, Amazon at 0.1, Meta at 0.0. And then got some laggers today on the Mag 8, and that's going to be Broadcom right at its flat line, Microsoft right at its flat line, Apple down about 0.5%. So it's a little mixed on the mega cap stocks right now, the mega techs. One way to kind of track, I'm kind of liking calls here, maybe. Let's take a look. I'm going to jump over here. I'm just going to load these calls up, like get ready to place an order, but I'm not going to place it yet. I'm going to load up the 684 calls. I'm not in them. Those are for today's expiration. I'm just looking at them right now, thinking about getting in. All right. Not getting in just yet. I like this little push here. I like the moving averages starting to point upward. We don't quite have a rollover on the MACD yet. So let's give this a second. All right. No trade just yet. I got excited there for a minute, but nothing yet. And anyway, back to the Mag 7, Mag 8. There's an ETF called MAGS that tracks the performance of the Mag 7. So that's one thing you can look at a glance to see how the whole Mag 7 is performing. And right now, the MAGs as a whole are up about 0.5%. So that is bullish for the S&P 500. All right, no trade yet. Still coming down a wee bit, actually really more like sideways, slight downward tilt with some sideways action right here. No trade yet. All right, so we're going to take a look while I'm waiting. Trust me, when I'm teaching, I'm keeping a sharp eye on the movement. So never fear. If we see something that looks good, we will stop what we're doing and we will jump on it. But while we're waiting, it could be getting a punch here. Let's see. While we're waiting, we'll look at the daily chart on the S&P 500, and let's see if we can kind of look at where we are headed on the daily chart. My daily chart has a lot of lines on it, guys. It's very busy. I'm sorry. It is very busy. So let me make that a little bigger for you so that you can see it better. And in the meantime, I'll still keep this chart here so I can see what we're doing. All right, here's our daily chart. And you can see that as of October the 29th, we hit an all-time high. This is the SPX, otherwise known as the S&P 500. This is the index itself. I like to look at the index itself rather than the SPY or the futures because we can see these gaps a lot better. You don't see them quite as clearly on the SPY or the ES because those run almost 24/7. Nice drop. We're getting a nice drop here. Again, I'm not going to take a put until we really come down and break this VWAP, and that's a good bit below us. So I'm waiting. Here's the VWAP down here. So I'm waiting to see if we can get down that low. I'm not going to take a put, even though we're moving down, until we get down through this VWAP. Okay. So all-time high on October the 29th, and then immediate dump, right? Just went poof. In the next couple of weeks, 2-3 weeks, we got down to this current temporary low right here at 65.35 is our roughly where we bottomed out. Okay. All right. Nice push back up. Okay. I'm considering calls here. Okay. So came down to this current low and bounced again, really strong bounce after we hit that low. We got this really strong bounce. You can see these are what we call gaps, right? Do you see the air between these candles? There's air. That's the best way to describe it. There's just air between these candles. That's a gap. Look at the gap we formed today. Lots of air. These are gap ups, right? These are gaps to the upside. Then these are gaps. There's a gap here to the downside right there. So the idea with gaps is that they tend to act like a magnet for price. When we see a gap happening, we know at some point it's going to fill. The gap is going to fill. Doesn't have to be today or tomorrow. It doesn't have to be in a week or a month or even a year. Sometimes gaps stay open, sometimes for years. But when they're close by, they tend to act as a magnet. Okay. So when we look at the daily chart, we can see this move down, push up, and then this strong roll over. Lots of people got bearish here, right? This is bear bait right here. This is bear bait. They're suckering people in saying, oh, we're dropping, we're dropping. And what did we do? Boom, another strong leg up. Here's the gap up here, gap up here. So another strong leg up. We are currently right now sitting at 68.73, which is roughly 50 points from the all-time high. So yeah, it's right there. 50 points is nothing. We can do that in a half a day. It's easy. Now, are they going to just charge ahead straight for the all-time high and boom, tag it and go? They don't usually play that way. Usually they do this, right? But it's worth noting that this is why I think the Santa rally is, well, I thought it before we even bounced up. I've been kind of thinking we were going to move up to the end of the year, but with these two last days, it's very clear to me that the market wants a Santa rally. Now, don't trade on that blindly. Use your indicators, use your discernment, and check the charts for yourself. But in my opinion, we are headed upward toward the end of the year. And this is why. Here's the chart telling you. So that's, again, we've got gaps. We could head down a bit. Just because we head down doesn't mean we can't turn and head back up, just like we did here, right? But just be aware, we've got gaps below us. However, I'm thinking that we get this push into the end of the year, and then at the new year, we may set about trying to fill some of these gaps. I think January, February could get a little shaky. We'll have to see what happens at the new year. We are going into midterms seasonally or traditionally or historically. That tends to be a bearish time frame. So moving into 2026, we could, all right, I'm looking at calls here. Give me a second. I'm just watching these candles here real closely. Okay. Nah, I'm really close to getting in this call here. I'm just waiting on these candles to confirm. Sorry, I've got my order so you can't see the screen. Let me switch over. All right, I'm going to go ahead and try these calls here. I'm in, punch it. All right, just a little flat right now on the profit. It's moving a little bit slowly here. I'm going to go back to my minute chart on the ES. All right, there we go. Nice little move here. Nice little pop. Just a little bit green on my trade right now. Nice pop. Okay, a little red. Give this a minute. Okay, little green, looks like volume coming on here. You can see that blue bar rising. That tells us volume picking up. There we go. Nice little spike. I'm going to take my win here at right here. 8%. I'm out. Punch it. All right. Nice win. Woo! Anybody take that one with me? I hope you did. That was fun. And you'll notice I jumped out before we hit the high, this current recent high, let's put it that way. Now, could we continue up? Yes, but remember I said I think 685 could be our top today, could be our resistance. So you'll notice I jumped out. I waited for this nice punch here. As soon as I saw this volume, I knew we were going to get a little pop. So watch here. Let me make this screen a little bigger. I'll show you why I jumped out when I did. So right here, we were just getting these teeny little, so I was in here for just a couple of minutes. Let me tell you exactly how long I was in it for. Got in at 11:52 Eastern, got out at 11:55 Eastern. So 3 minutes I was in that trade. So 11:52, I got in right here and then got out on this big candle. Now, the reason that I got in here is because we had the MACD rolling over. Here you go, 11:52 right there. Do you see it? That screen's a little smaller, but you can see the MACD rolling over right here at 11:52, right where I jumped in. And I jumped out right at this big volume bar. So as this volume, you could see the volume kind of pushing before the candle made its move. So when you see that, sometimes you will see it takes a few seconds, even sometimes a minute or two for the move to materialize. Now, it doesn't just have to be upwards. We get high volume downward moves as well. But because we were already moving upward, I had a feeling this volume bar was going to be in the upward direction. So as I saw the volume increase and as I saw this candle spike up, I jumped out with my 9%. I think it was 10 actually by the time I was done. Yeah. So, okay, and there we go. Nice little move here. So that is, look at this, 3 minutes, teeny move, guys, teeny little move here. And we took 10%, took 6% on the first one for that tiny little, that one was less than a minute. This is why I love the 0 DTEs so much. This is why I love it. I'm in and out of these trades all day long, and I'm just catching these boom, 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 little moves. That's okay. That's okay. I'm okay with that. So right now, again, just like in our previous move, again, we're continuing to the upside. Does that bother me? Not a bit, not a bit, because I've already made well past my quota for today. I have a goal that I shoot for 4% of my account daily. I don't always hit that. But I want 4% of my account a day. Now, sometimes I'm going to have losses, so that balances itself out, but that's my goal. And I made that goal easily today. So do I care that this move is going on without me? No, I don't. I got my 9%, my 10%. I'm happy. So this is how I do it, guys. We're coming up to the end of the stream. This was a fun day. We took 2 wins on the stream today, one for 6%, one for 10%. And it was really fun having you with me. Ebony, thank you so much for joining and saying hi. And anybody else who's here and hasn't said hi yet, thanks for being here. It's been my pleasure to trade with you. So much more fun than trading alone. And outlook for the rest of the day, bullish. Do I think we could drop down and hit some low numbers? Yes, but I think by and large today we are bullish. Okay, just made a new high, 685.0. So let's see if we hold this 685 ceiling. We could break through it. We don't have to hold it, but it's my, right now the options and gamma positioning suggests we may stop at 685. Let's see if they can get it pushed up higher than that. Again, I'm pretty much bullish from here out toward the end of the year. All right, guys, it was a pleasure. I'll be back here again tomorrow at 9 a.m. Mountain, or that would be 11. Is that 11 Eastern? Yes, 11 a.m. Eastern. All right, it's good to see you guys. Thanks for being here. We'll be back tomorrow. Bye for now.